Hi guys, welcome back to another video. It's another tape reading session. We're going to go through price action. In the AM session, it's Wednesday the 26th of November. Let's get into it. Prices, we're still quarter past 11 in Eastern time, so still relatively early on. We're approaching the lunch hour, but price action today, we are going to go over it. So we opened here, 9:30 candle, opened at 25222, and then we closed 414 yesterday at 25077.50, which gave us our opening range gap, which I marked out as this. Then I just draw the up quadrant, the midpoint, and the lower quadrant on myself by using the GAN box. But so that big upper quadrant, um, just before getting into the price action and price development, my eyes were really on relative equal highs to the left of us, um, here, just above the new week opening gap low. But we had so much sort of low resistance lows here. I mean, got all of this basically as low resistance lows relatively equal to each other. So that in line with the opening range gap midpoint, and then the new week opening gap was my main real objective today. But I wanted to see price sort of take that high first, which we did literally as soon as we opened. Um, Sorry, let me mark that out. So yeah, these relative equal highs to the left of us. I wanted to ideally see them get taken first for us to move lower, but let's see what happens. I mean, as you can see, yeah, we open, we just immediately run through them. So then my next thoughts are whether price will continue going higher, and our next objective being the midpoint of the new week opening gap, or will we then start to fall down and roll back over to take all of this sort of low resistance liquidity? Just put this back one. Right, first the value gap formed in the session, always mark it out as well as the previous 3 days, because they always get sort of respected and tagged in. I mean, there's the pink boxes of the previous two, and then the third one's done this. So we obviously wasn't going to come down and touch them today, but um, some of the times we do interact with them. So please continue to extend them out. Um, yeah, the last 3 trading days as well as the day you're trading. So yeah, 9:37 we formed our first fair value gap in the session, which is marked out here, also in line with um, the new week opening gap low. Let's get rid of that. So yeah, mark that out. Also, opening range gap higher there, all within that fair value gap. We tap into it, continue to tap into it. But we then close above it. I mean, as soon as we get this candle at 9:40 and we leave literally nothing on the gap left, I'd be hands off and not touching it. And also, we're not in the macro yet either, so let's just mark the macro out. So yeah, we push above that first fair value gap, whip back into it, and then ideally, I'd always want to see a closure above midpoint of this premium weight, which we do. So I'd probably ideally anticipate that these highs get taken as well as pushing to the midpoint of the new week opening gap. And there we go. I mean, that could have been your entry model itself. So inversed first fair value gap session, tap back into it, run it past the midpoint, and then find an entry within here on the sort of 15 seconds, takes us to the midpoint and the week opening gap, takes them highs. I mean, even if you just long it on the midpoint of the premium wick, you're going to get a fill. You just don't want it then going below sort of the midpoint of this premium wick. So yeah, that could have been a nice little entry. If we were to continue bullish, I'd ideally want us just to now rip through the midpoint of the new week opening gap. I don't want price to then roll back over back into the first fair value gap. I want price to go deliver with speed to the upside, to this next level, to the high of the new week opening gap. But ideally, as I said earlier, I did want shorts today. I mean, all this liquidity rested below. Yeah, so if you were bullish, you don't want to be seeing that because you want price to be delivered quickly and fast to the next objective. You don't want the midpoint of a new week opening gap or a new day opening gap holding and then rolling back over. So that's what we do. We roll back over to the first value gap. And then we displace away from it, inverse it, tap back into it, and then we roll back over. Um, on my main accounts, I did have a limit order here on this CB within the first fair value gap in the session. This would have been my entry model, but as you'll see in a second, it doesn't happen for us because price look at that. We don't feel that inverse by it's about 0.75 of a point. But you see, look, that red line, opening range gap higher, completely wick through it, respecting it, and then we roll back over. This is what you want to see. Displacement downwards, quickly, efficiently, to take relative equal lows with speed. There you go. Within sort of 2 candles taken. We've got all this here. We've got the opening range gap, midpoint, and then the new week opening gap. So I'd expect price to sort of draw towards that, and then there you go. Within 3 candles, we've moved efficiently, quickly, to our objective of the day, wick through the Tuesday's high. But yeah, it's a little bit unfortunate we didn't fill this Sibby, but it is what it is. So we come back, we fill the new week opening gap. Wicks do the damage, body respecting it. Look at that. High of it, wicked, push back higher. Ignore that, that's just the macro. Yeah, price displaces away from the week opening gap. Midpoint, the opening range gap, interacted with again, pushes the price back higher. Where do we draw towards? First fair value gap in the session and that unfilled CB in line with the opening range gap higher. I mean, them 3 sort of key points of the market, that is such a sort of black hole for price and liquidity to draw towards. So I'd also always say a CB within the first fair value gap in the session is really, really, really sort of high probability. And as you can see, we draw to that. Not only do we draw to that, but look at that. To the absolute tick, the midpoint of that gap getting respected, and we displace lower back towards the new week opening gap from the 17th of November and the opening range gap midpoint. I mean, if you're not confident with leaving your limit order on that SIBI in the first fair value gap, then it's institutional order flow entry drill stops there, and then just let it run to these lows, partials off these levels. Your 6R goes laughing. But yeah, we come back new week opening gap from the 17th, and then we draw straight back towards first fair value gap in the session. You see how important this area of price is. Price will always draw towards this. Just down here, look, wick through the upper quadrant within a BC, sends us higher, takes this higher, fills in this bearish imbalance here. Go back through, come back, respect the first fair value gap. Then we eventually begin to displace away from it. We do close out of it, but we come back, respect it, leave the bottom half of it, and then we displace out of it. Now, if you were bullish, and our next objective would be the higher new week opening gap from the 10th of November, we want to see this continue. We want to see this price action continue. We don't want to be doing what we've done here and rolling back over. We want straight displacements, quick speed. It's exactly what you're going to get. There you go. After seeing this, institutional order flow, order block, and then we're caught up with real time. But as you can see, price hits a little bit of chop work, fill in this bullish imbalance, and then we just continue higher. So ultimately, I would anticipate we're going to come and tap into this unfilled SIBI on the daily time frame, which I've marked out earlier. At least come and take the high of it. So I might actually look for a trade within this. But yeah, that was price action today on the UKN session. Hope you enjoyed and learnt something. And I'll see you tomorrow for the next one. Peace.